It was a Black Wednesday, isn't it, in the stock market? In fact, we could see the market actually falling the entire day till the end of the day. Of course, we'll discuss all that. So, welcome back to the Stock Market Podcast from mpiinvest.com. Well, coming to the market yesterday, the market actually started off with a small gap up, but then tried to rise, and from there it was a fall. In between, again, it tried to rise, and that went on to an even bigger, severe fall. In fact, finally, we could see the Nifty actually settling down and closing at 18,042. That is just inches away from the major support of 18,000. So now it's a do or die kind of situation for Nifty kind of, right? Because yesterday we could see almost every sector. It was a major sell off across every sector. Naturally, the kind of fall that was seen, we could expect a big selling by FIIs. In fact, FIIs have actually sold for more than 2,620 crores, while the DIIs have bought for just about 700 crores. So naturally, there was a net sell of almost more than 2,000 crores that led to the big fall. So what was the reason, why the FIIs have sold? Of course, we did expect the Federal Reserve minutes yesterday evening, and in fact, the interesting part is that European market was continuously in green. In fact, for the last 3 days, European market has been closing in the green. So, of course, the concerns were there in the US. The Federal Reserve meeting minutes were a meeting which was conducted in December during the monetary policy announcement. The minutes of that meeting was coming out yesterday evening. So that was something that was expected, but apart from that, there is no other reason. But probably they wanted to be just cautious, and the big selling happened. So now this big selling happening just a day before expiry is something surprising. However, we need to see in detail on what's happening in the US front. So after the Indian markets closed, we could see the US market actually opening in the green. So before the Federal minutes, it actually opened in the green. Then from there, it went on to red. It was a volatile day in the US market as well. From the red, in fact, as the minutes came out, market kind of started settling down. I would say, US markets have been on very high volatile note for the last few days. So naturally, the market is kind of, juggling between the bears and the bulls, and he still doesn't have a clear direction. So this can be considered as a consolidation also, which could mean that there could be a big move coming in the US market. So that could come any moment, but let me say what happened with the Fed minutes. So when the Federal Reserve, team came out and released the minutes, so one thing was clear that they don't want to, give a dovish view. So they wanted to maintain the hawkish view. And one thing that they told was they are persistent on getting the inflation down to 2%. In fact, a lot of analysts say that getting into 3.5% inflation around this year is possible, but 2 is not possible, at least in 2023. So that actually means that the interest rates are going to continue. But one good thing there I would say is, probably the interest rates are going to continue, but then the jobs data is something that needs to be watched, because that's coming on Friday. That is tomorrow. So if the jobs data is continuing to be strong, then there could be some problem. But the good news, other way I would say, is the manufacturing sector data came in the US, which showed again a degrowth. So this was kind of a positive. That is that if the economy is contracting, there are chances the Federal Reserve may go slightly slower on the interest rate hikes. But then November job data which came was actually good. It was better than expectation. The jobs, number of people without jobs were actually lesser than expectation. So that was something which contradicted this situation also. And there was also another survey that came out in the US that said that the wages have actually gone up in the US. So all these are not favoring. So these are things which can actually put the US market into trouble, and probably a recession as well. So that's exactly why the US market is kind of in a confused mode right now. The investors and traders are all in a confused mode right now. And right now, the US markets don't have a direction. But still, in spite of all this, we could see the US market actually closing slightly in the green yesterday. So Nasdaq, Dow, S&P 500, all of them closed in the green. So it was kind of good. We could see Tesla recovering. Tesla was up by almost 5% yesterday. Apple also went up by almost 1.5 to 2%. But then as major drag came in from the Microsoft. Microsoft actually fell almost 4 to 5% yesterday. So that was something which actually gave some negativity again. because they also, basically there's a fear of recession in the market. And, with all the things that's going around, the war, the COVID, and all these things, it's actually kind of, US is in kind of a turmoil. So now, what could happen now next? So today being the expiry, today is Thursday, the weekly expiry and the first expiry of 2023. So one thing is for sure, the volatility is here to stay, and markets could be in a directionless mode. But one good thing I could say is, as the US market closed in green, we could see SGX Nifty kind of recovering from the lows. In fact, the morning also when it started, SGX Nifty opened with a gap down, and from there it has been continuously rising. But it's not been able to sustain a higher level, and it's been kind of flat or supposed to. That means probably we could see the Indian market also opening flat or slightly negative, not a big gap down or something like that. But however, the important level to be watched is 18,000 for today, because a lot of people have questions with 18,000, and that any trigger towards a lower than 18,000 could actually make a big sell off that could come in, and probably there could be a recovery if at all there's a fall. But then one thing is for sure, it's going to give some jitters to the traders today. So being an expiry, that needs to be watched. But whatever it is, being a Thursday, even a close below 18,000 may not actually mean that the markets have actually gone bad. But then tomorrow, if the market closes below 18,000, then that could actually probably lead to some temporary bearishness in the Indian market. So that needs to be watched on the lower side. On the higher side, of course, 18,200 to 18,250 will continue to be a resistance zone for now. So these are things that are in focus right now. If you see yesterday, Divi's Lab, and I think we could see some, HDFC Life. These are few companies which actually closed in the positive, but otherwise most of the stocks ended in the negative. So it was a broad-based sell-off. So let us see today how the market actually expires. Of course, I am expecting the market again now kind of, we'll have to lower down the reach. So expecting the market to kind of expire between 17,900 to 18,300. So this is the range that I'm expecting the market to expire today. Let us see how the market goes. So one thing first for sure, 18,000 is going to be a good support, but if it is broken, let's see how the market would react to that in the negative side. So that's it for now. Looking forward to a good expiry. This is Srikant Rajan signing off. But before we leave, do remember to press the like button. And of course, that motivates us. And do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye. Have a great day.